Welcome to the Deep Dive.
Great to be here.
So today we're going to look at some, well, pretty unpredictable days in financial market history.
Yeah, the real head scratchers.
Exactly. Think of this as a shortcut for you listening, a way to understand just how surprising markets can be. We're looking at some of the wildest moments.
And these aren't just weird anecdotes. They actually tell us a lot about how markets function, or sometimes malfunction. The uncertainty is inherent.
Okay, let's dive in. First up, January 2015, the Swiss franc, the Swiss National Bank just suddenly pulled the plug.
Hold the plug is right. They announced they were removing the Swiss franc's peg to the euro. This peg, it's like a safety rail they'd had in place.
The promise, really, to keep the franc from getting too strong against the euro.
Okay.
And then boom, what happened?
Astonishing is probably putting it mildly. The moment the news hit, the francs just exploded upwards against, well, pretty much everything.
In seconds, right?
Literally seconds. Moves that you'd normally see over weeks or months, they happened almost instantly. It was pure chaos in the currency market.
Wow. And for you listening, imagine businesses that relied on that stable rate. Suddenly, their whole world tilted.
Absolutely. Huge losses appeared out of thin air. It just hammered home that, well, even central bank promises aren't forever. Markets react, and they react fast.
You really can't predict these policy shifts or the sheer speed of the reaction.
And it kind of challenges how we think about risk, doesn't it? We rely on history, but these massive, unexpected things, sometimes called black swans.
Right, those super rare, high-impact events.
Exactly. They remind you that the unexpected is always, always lurking.
Okay, let's jump forward a bit. 2021, GameStop. Now, that was the story.
Oh, yeah. GameStop, a struggling video game retailer, right?
Yeah.
And suddenly its stock price just went vertical.
It seemed to defy all logic, didn't it? From a traditional investment standpoint anyway.
Totally. What made it so fascinating was who was driving it. It was this huge wave of, individual retail investors coordinating online.
On forums like Reddit.
Yeah. They banded together, often targeting stocks that big hedge funds were betting against. This is where we started hearing meme stocks all the time.
Meme stocks, right. Stocks driven by social media buzz more than, say, company profits?
Pretty much. And again, we're not giving investment advice here, obviously. The point is how surprising it was to see this collective online sentiment become such a powerful market force.
It really shook things up, showed that the crowd, when networked, could challenge, the established players in a big way.
It definitely added a new dimension. You couldn't just look at the balance sheet anymore. You had to consider this social momentum factor.
Okay, another type of surprise. Flash crashes and the related idea of fat finger errors.
Ah, yes. Those moments where the market just drops like a stone, suddenly, terrifyingly fast.
And it often bounces back almost as quickly, right?
Often, yes. And a lot of this comes down to technology. So much trading now is automated, done by algorithms.
Computers trading with computers.
At lightning speeds. So if there's a glitch, or if a human trader makes a mistake, types in the wrong number, the classic fat finger.
Whoops.
Exactly. It can trigger this cascade of automated selling. The machines just follow their instructions and suddenly the price collapses.
That sounds stressful.
It is, and that's why we have things like circuit breakers now.
Ah, the safeguards?
Right. Mechanisms designed to automatically pause trading if prices fall too quickly. It gives everyone a moment to, catch the breath, figure out what's going on.
Stops the panic spreading, hopefully. Shows how interconnected and, well, fast everything is now.
Precisely. It's an acknowledgement of the risks that come with this speed and automation. Human error, tech glitches, they can have huge ripple effects.
So wrapping this up, we've seen policy shocks, crowd power, tech glitches. What's the big takeaway for you listening?
I think the main thing is just humility, maybe. Markets are complex systems driven by human psychology, technology, policy, all interacting. They're always capable of surprising us.
Yeah. You can analyze all you want, but predicting these specific bombshells, pretty much impossible.
No one has that crystal ball.
Our goal here wasn't to teach prediction, but just to share these fascinating stories, to highlight that inherent uncertainty.
And maybe leave you with a thought. What do these moments of intense surprise and chaos really tell us about ourselves? About how we react under pressure, how we perceive risk, and how we navigate these incredibly complex systems we've built.
Definitely something to chew on. It's more than just numbers on a screen.
Absolutely. It's deeply human in the end.